Good. The objective of IAS number 41 is to establish standard of accounting for agricultural activity. Can we write the notes as you read? No, you will not manage. I'm not reading, we are discussing. You will not manage, just leave the pages. It will waste our time, I know. You cannot manage. So the objective of IAS 41 is to establish the standard of accounting for agricultural activities. So what we want to check, let me just give you the overview before we deepen into notes. You are the manager or you are the accountant of a farm. And the farm I'm talking of here is a commercial farm. Farm which is you grow these crops with the main purpose of selling. So how do you account for the farm produce in the financial statements of that particular farm? That is our main objective. Mwenye shamba, so let's assume you are the accountant, then the shareholders of the farm, they come and consume from the same farm. How do you account for that? There are some workers in the farm who have consumed some items from the farm. How should you account for that? Those are what we want to check. So there are some terminologies which I want us to familiarize with first. Terminology number one is biological assets. So biological assets is a common term when we will be doing some computations for agricultural activities. So what are biological assets? These are living plants and animals. Actually, by extension, living plants and animals within the farm. So when we are going to carry out computation, biological assets are those plants in the farm and also animals which are in the farm. So animals and plants for agricultural activities, we shall refer to them as biological assets. They should be valued at fair value and recognized as non-current assets in the statement of financial position. So this standard requires, even if the biological asset is kifaranga, you need to recognize that kifaranga as non-current asset in the financial statement. Even if it is maize, which is growing, you bring them in the books as non-current assets. Please master that, provided it is a living animal and plant. Don't check at maybe the age. The standard requires all biological assets to be recognized as non-current assets in the statement of financial position. There is another term, bearer plant. This is a living plant that is used in production or supply of agricultural produce, of which is expected to bear produce of more than one product. So bearer plant is just a plant which we expect to get some economic benefits from. Agricultural produce are harvested products from biological assets. So kama ni matunda, so matunda ni agricultural produce. Cost to sell are the incremental cost directly attributable to the disposal of an asset, excluding finance cost and income taxes. So cost to sell is the cost you incur to dispose of the agricultural produce. Initial recognition of biological assets. An entity should recognize biological assets or agricultural produce if the following conditions exist. This is a common question, very common. Examiner will always ask you to state there are three conditions. State the three conditions under which an entity should recognize biological assets in the financial statements. So when do you bring the biological assets in the books? Those are the conditions. So condition number one, for you to recognize a biological asset in the financial statement, number one, if an entity has control over biological asset as a result of past event. So the keyword is control. And what does control stand for? Control goes hand in hand with ownership. So you only bring it in the books if you own. you own that particular biological asset. That is where the control comes in. Then number two, if it is probable that future economic benefits will flow to the entity, there is expectation of something. You should not recognize an asset in the books and out of which you don't expect anything. At least there is expectation of cash flow coming to the entity as a result of having that biological asset. The keyword being economic benefits. And finally, if the fair value or cost of the asset can be measured reliably. You know, fair value is the market value. These biological assets, you record them in monetary values. So what are you going to recognize? You must know the value or the cost. So you recognize them at maybe the market value or the cost of acquisition. If it is a cow you acquire, you can recognize that cost. If it is maize you have, you can get the market value, then you record in the financial statement. So I've said this is a common question in agriculture. I've seen examiner asking students to state the three conditions which must be satisfied for an entity to recognize a biological asset in the financial statement. So number one, control. There must be control. And control, we have said it comes with ownership. So there must be control. There must be expectation of economic benefits, and the fair value or cost must be known. Those three. Let's proceed. Measurements. All biological assets are initially measured at fair value. However, in the subsequent period, they should be measured at fair value less cost to sell. Yeah. Initially, you recognize the market value. In future, you will recognize them at fair value minus cost you can incur to dispose them of. Specific accounting treatments. Specific accounting treatments. Number one, shareholders / family consumption. Shareholders / family consumption. It represents the value of items consumed from the farm by the farm owners. So, kama delamea, wewe ni accountant hapo kwa hiyo shamba, the owner of the farm, yeye anakuja na marafiki wake. They just eat, they just take milk, they drink, they take fruits, they eat. You are the accountant. How should you account for that? You cannot say, usifanye hizo hesabu na emotions, ati shamba ni yao, wacha wakule venye wanataka. Yes, let them eat, but make sure you recognize them in the financial statements. So down there, this amount should be recognized as revenue in the respective revenue accounts, then recovered from their capital as drawings. Get that clearly. The amount consumed by the farm owners, you bring it in the revenue account as revenue. When they consume, you recognize revenue. I'll explain why it's a revenue. Then you reduce their capital because it is a drawing. If you continuously eat from your farm, the capital which you are invested there, you are utilizing it. So for the drawing, I know you will not have any issue with me. Where the issue comes, how do you recognize what has been consumed? Now, they don't pay. They are the owners of the farm. They don't pay. So the next thing you will ask me, how then you recognize revenue? We recognize revenue on what if assumption. What if they never consumed? This produce would have been sold. And when you sell, you get money. But now with them, they are consuming without paying. So we assume if they never consume, we could have sold and we could have gotten this much. Now that we are not selling, we estimate they have taken milk worth 20 liters. 20 liters, if we sell, we'll have gotten 2,000. So that 2,000, you bring it as revenue. Then, because they are not paying, you recover from their capital. So you reduce in the balance sheet, you go and reduce their capital, then you recognize this one as revenue in the financial statement. I hope that one you have understood. So when we go, and consumption here by the owners includes even the relatives. The relatives. If they are giving relatives some farm produce, that one we treat as shareholders or family consumption. Number two. Number two. Number two is shareholder stroke family. Shareholder stroke family labor. So the owners of the farm, they come to the farm, then they pretend ati wao pia wanalima na wafanyikazi. So if they work well and good, the question will be, how do we treat? Usiseme ati hata yeye leo pia wacha aumie kidogo asikie vile tunasikianga huko kwa shamba. Fine, wacha asikie, but you as accountant, you have to do something in terms of the books. So what are you supposed to do? We read. The value of work done by the farm owners should be expensed and adjusted their capital, since it is considered to be value addition to the farm. Farm of A, not I. So wamelima, wao wataki kulipwa. The owners of the farm wataki kulipwa. Wengine hata wanakuja tu kulima ndio wapige selfie wa post. Watu waone wao pia wanalima. Fine. So if they come and work in the farm, you as accountant, again we go to what if. What if they never did this work? We could have hired laborers from outside, and the laborers could have been paid 1,000 to do that job. So now that the laborers were not hired, and also the farm owners are not being paid, then this amount is treated as value addition to the farm. So you increase their capital. So increase capital with the work done by the farm owners. So capital should be increased, then you expense that amount. Why must you expense it? Wacha niseme ya kawaida, then I take you deep kidogo. You understand why that amount must be expensed. At face value, if you could have hired someone, we would have paid. So it would have been an expense at the end of the day, because we could have recorded wages in the books. But now someone has not been hired, the farm owner who has done that work, that amount must be expensed. So if you fail to expense this amount, so let me take you a little bit further. Can you check it on a taxation perspective? How do we tax corporates? Corporates are taxed on the profits. Expense is one of the determinants of profits. That one you know. When expenses are high, the higher the expenses, the lower the profits. The lower the profits, less tax. And nobody wants to pay more tax. That one you are aware. So if you could have brought someone from outside, we could have expensed wages, meaning profit could have gone down. Now these people have worked. If you fail to expense the work which they have done, it means you will report high profit. The higher the profit, the higher the tax. So mimi niende nifanye kazi kwa shamba yangu ndio nilipe tax means. So that is double tragedy. I've worked, imechoka, then again I get taxed because the profit goes up. So the work which has been done by the farm owners, you treat it as an expense, and two, you increase their capital because they have added value to the farm. I hope that one you have mastered. Number three, workers' consumption and payments in kind. So workers' consumption is whereby the farm workers wanakula hapo kwa shamba. They eat, especially in our village, we grow ground nuts. I know some of you that don't have 100% do not know how ground nuts are harvested. I'm sure there must be one, two, and I can even tell you who I'm suspecting might not know, but that is not our concern here. So during harvesting of ground nuts, unajua nyinyi mnajua njugu karanga, but you've never seen your njugu karanga ikivunwa. It is nutritious. It is nutritious at the point of harvest. Ikiwa mbichi, what you need is just a backup of water. So watu wanakulanga wakunywa maji, wanakula walikunywa maji. If you are not careful, if you are supposed to get 10 sacks from that farm, you will end up getting 7. They can eat everything. So you as accountant, if they eat, you need to do something. Payment in kind, because we normally combine the two, payment in kind is whereby instead of you being given cash, we give you the farm produce. So tunakupea kama mahindi, nasema hii mahindi ni 500 na wewe pia ulifaa ulipe 500, so imekufa na hiyo semanga hivyo. So back to the reading. The value of items consumed are or paid in kind should be recognized as revenue, then recovered from the workers' salaries and wages. As simple as that. By the way, for your information, in farm accounting, anything going outside the farm, in whichever form, is recognized as revenue. Even if it is donation to children's home, donation to churches, to mosques, donations to anywhere, political parties, anything going outside the farm must be recognized as revenue. That is what you need to know. Then from there, you come and check where to recover that amount. If it is donation which has been authorized by the farm owners, then fine, bring it as revenue, then their capital will suffer. But if it is getting out due to employees within the farm, then bring it as revenue still, recover it from their wages. So that is what you need to know. Anything moving outside, you bring it as revenue, then you check how to recover that amount. So whatever goes due to employees, revenue, their wages. Inter-economic transfers. We have inter-economic transfers. This is the transfer of items between various revenue departments within the same farm. E.g., transfer of manure from livestock to crops. The transferring department should recognize revenue, while the receiving department should recognize an expense in relation to such transfer. Hiyo ni kizungu mingi. What we are saying, you have livestock and you have crop. So from livestock, I can take manure. I can take manure from livestock to crops. So you don't just say, hii shamba ni moja, sasa manure ikitoka hapa iende pale, shida ni gani? You have to account for it. What if there was no crop department? Hiyo manure ungeuzia outsiders. So if there is, so that's what we are calling inter-economic transfers. You take from livestock to crops, or from crops to feed livestock. So the one selling, for example, ukitoa manure, livestock account, you recognize revenue. Ni kama unauza. So kwenye natoka, you recognize a revenue. Then the other side, they recognize an expense, because if this side was not there, they could have gone out to buy. So you recognize an expense. So receiving, recognize expense. Sending, recognize revenue. I hope that one you have understood. So to that end, I don't have much. Unless someone has a question, prepare your past papers. Prepare your past papers. Prepare your past papers. Let's meet in November 2020. November 2020, which question? Question 5. November 2020, question 5. So I hope everyone is there now. Page 43, as Olivia said. Yeah, I'm already there. Just waiting for you. So allow me to read that question. It says, the following trial balance was extracted from the books of David Wekesa, a farmer, as at 31st October 2019. So there was inventory, daily cattle, maize growing, daily cattle feed, fertilizers, that is for maize, land and buildings, tractors at net book value, other cattle bulls, cattle at net book value, purchases. So they purchased dairy cattle, fertilizers for maize, and for napier grass. Napier grass is classified in livestock accounts, kindly. Napier grass, you take it to livestock account, not crops. Maize seeds, dairy cattle feeds. Sales, they had sales of milk, dried maize, green maize, dairy cattle, then manure. Crop expenses, labor, other expenses. Napier grass, labor, general expenses, trade payables, capital, cash at bank, dairy cattle expenses, we had medicine, labor, other expenses. Additional information, inventory as at 31st of October 2019 were valued as follows. So we had dairy cattle, maize growing, other cattle bulls, dairy cattle feeds, fertilizers for planting maize. During the financial year ended 31st October 2019, the following distributions of farm produce were made. So products, maize consumed by family members, so that is family consumption, then milk delivered to relatives' hotel. So all those are family consumption, family hotel, and those ones are consumption. Manure valued at 600 were removed from the cow shed and used in the maize plantation. So that's what I said, intereconomic transfers, manure from here to the other side. Maize stock valued at 1.5 were used as dairy cattle feed, the same thing, they moved from crops to livestock. Cattle bulls are used for pulling carts. So depreciation is to be provided on tractors and carts on the reducing balance method at the rate of 25% and 12% per annum respectively. Income taxes are estimated at 3.6 million. Required revenue accounts for the year ended 31st October 2019 income statement for the year 2019, and statement of financial position. So now, when they talk of revenue account, you see they're talking of revenue account and the profit account as the second one. Income statement is the P&L. So revenue, you check within that farm, how many departments are there? So far from what we have read, there are only two. There is the livestock, because they're talking of dairy cattle, dairy, so there is livestock and there is crops. So when you are required to prepare revenue accounts, you just come up with crop accounts. So you deal with all items touching on the crop, then you go to livestock. Then once you are done with the two, you move to the second one, which is the P&L. You combine now all the entire farm. So for revenue, you be specific, livestock and crops. But for P&L, you bring everything into one account. So allow me to start. I can start with any. Allow me to start with the crop account. You can even start with the livestock. So right there, crop revenue account, crop revenue account, crop revenue account. So you will have here, let's have two columns. So you start by giving us sales. So check the sales which relates to crops in specific. So sales, I can see sales somewhere in the trial balance. Check your trial balance. In the trial balance, there is sale of milk, dry maize. Yeah, so dry maize is 36. So sales, you take 36 plus green maize 11,340 plus dairy cattle, no, manure, no. So those are the sales for crops. The one for green maize and the dry maize. So can you add the two and give me one figure for that? Add the two and give me a one figure. Somebody? So people are giving me 47,340 for the far end, 47,340. Then you less cost of sales. So less cost of sales less cost of sales. So cost of sales will give us opening inventory. Opening inventory. So the opening inventory you are giving us here is the one we touches on crops. So inventory is the first item in the trial balance. Daily cattle, no, maize growing, 3,600. So you'll take the 3,600 plus 3,600 plus fertilizers, 1,980. So fertilizer is 1,980. So those are the opening stock. So add the two, what do you get? 36 plus 1,980, 5,580. You are there, 5,580, 5,580. You add purchases. So add purchases. You add purchases. Purchases. There was purchases for dairy cattle, no? Fertilizers for maize. Fertilizers for maize was 2,160. Fertilizers for maize, 2,160. Napier grass will go to livestock. Teresa, opening inventory, you add what? So this is 36. Inventory, the first items in the trial balance. There is dairy cattle, of course, that is out. Maize growing, 3,600. Then fertilizers. Fertilizers, 1,980. So 36 and 1,980. So, Susie, I hope that is okay. I hope umeona.
Yes.
Good. So purchases 2,160. 2,160 plus maize seeds. There is maize seeds, 1,080. 1,080. Only those two. Can you add the two? 2,160 plus 1,080, 3,240. Someone has already added 3,240. Good. Then you less closing inventory. Closing inventory. Closing inventory. Check additional information number 1. Closing inventory. Check additional information number 1. Number 1, we have dairy cattle, no, maize growing 27. So maize growing 27 plus other cattle, dairy cattle, fertilizers 1,080. So for closing stock, we only have those two elements. How much is the total? 3,780. So this is 3,780. So in accounting, cost of sales is opening inventory plus purchases minus closing inventory. That is how we get cost of sales. So take that minus that. You tell me how much. Tell me how much. People have given me 50-40. Thank you. So this is 50-40. So by extension, you subtract. So take sales minus cost of sales, you get gross revenue. So gross revenue, 47,340 minus 50-40. People are getting 42,300. Na leo nimeamka vizuri. Sasa wengine mtalaki nipea answers. Today, nitawatumia kila mtu So that is 42,300. Yeah. It's like your huduma. The sour. Then let's go to other revenue. So you add other revenue. So other revenue, the way I told you, this other revenue is also very funny. Anything going outside the farm, anything going outside, in whichever form where let hapo kama revenue, utatafuta baadaye how to recover that amount. So I'm seeing check notes 2. There was maize being consumed by the family members, 1080. So family consumption, there is family consumption. So family consumption, they have consumed 1080. Milk will go to livestock. Then there was some crops which were used to feed livestock. So transfers to livestock. Though livestock will not pay, but it's like they are buying. So our wanauzia livestock. So check note number 4. Maize stock valued at 1.5 were used as dairy cattle feed. So 1.5. They were used to feed the dairy cattle feed. So it's like they are selling to livestock. So total revenue, 42 plus that, what will you get? Julia, you are kidogo. 44,880. Julia, umesema umepotelea wapi?
From closing stock.
What exactly?
I'm not getting the figures you're getting. So from closing stock, growing maize 2,700, fertilizer 1080. So then I get that 780.
2,700 plus 1080.
Yes.
You get?
They put it at 780.
37.
So where is this 50/40 coming from?
Oh. Cost of sales in accounting, maybe umesahau. In accounting, cost of sales, to get cost, we have said sales minus cost of sales. But cost of sales is the sum of opening plus purchases minus closing stock. So 50/40 is this plus that minus the closing stock. Confirm, Trillia?
Okay.
Umepata?
Yes.
Good. So our total revenue is 44,880. Less expenses. So the expenses which I want you to bring are expenses which are specific only to crops. So don't bring all the expenses, just the expenses touching on crops. The first one I want us to start with is the transfer from livestock. You know, whatever they are receiving from livestock is an expense. So transfers from livestock, transfers from L-stock, zile manure ni kama walinunua. So check note number 3. From livestock, there was a transfer of 600. There was a transfer of 600. Then go now to the trial balance. In the trial balance, there is somewhere you will utaona, there is crop expenses somewhere. For crop expenses, there is labor. There is labor somewhere, and labor you will see 6480. And there is other expenses. Other expenses. Other expenses is 720. Please just you write them to the extent that you have seen where I'm getting those figures. So as far as I'm concerned, there is no any other expense for crops, but I can give you some few seconds to check across. If you have one, maybe you are questioning, you can ask me. If you have none, then you give me the total. Yes, so people are getting 7,800. 7,800 to be the total expenses. So when you take the total revenue minus the total expenses, whatever you get will be transferred now to the profit account. So you say net revenue to P&L, to profit surplus accounts. Net revenue to P&L. How much are we transferring? How much will we transfer? So people have gotten 37,080. 37,080. So we are done with crop revenue accounts. We are done with the crop revenue account. Unless you have a question, if there is no question, I want us to go to livestock. Livestock accounts. So if no question, up there, livestock revenue accounts. Livestock revenue accounts. Livestock revenue accounts. So also 2 columns. Like that. So we kick off sales. So sales, let's check sales for livestock. Milk, there is milk, 27,360 plus 27,360. Najua sometimes camera inside inanisumbua. So nataka tukue pamoja. $27,360 plus dry maize, no, green maize, no, dairy cattle, 8,100. 8,100 manure 3,000. Manure 3,000. So can you add the 3? The 27, 360 plus 81 plus 3. What do you get? $38,460, Brian. 38,460. We get 38,460 less cost of sales. So less cost of sales, less cost of sales. Cost of sales, you start with the opening inventory. Opening inventory. Opening inventory, the first item in the trial balance, dairy cattle, 54,900, 54,900 plus 54,900 plus dairy cattle feed, 2520. 2520. What will you get? 54,900 plus 2520. You are likely to get how much? 57, Marianne, for 20. 57 for 20. 57 for 20. Then purchases. Purchases, where are you? There. So purchases, we have daily cut. Huh? Yes. Purchases. We have daily cattle at, how much is this? Daily cattle is 10 for 40, if I'm right. Daily cattle purchases is 10 for 40 plus fertilizers for napier grass. So, so 10 for 40, napier grass, 4,000 plus dairy cattle feed, 6120. So can you add the 3? So people have gotten 20,560. 20,560. Then you go to closing inventory. Closing inventory. So closing inventory, we go to note 1. Dairy cattle, 54. Plus maize, no other cattle, bulls. Bulls mostly. Check even the opening. Please, can you check your opening inventory in the trial balance? Check trial balance. Bulls were not part of the trial balance. They were not part of opening stock. In fact, ukiangalia bulls, iko huko chini na kina tractors, land and buildings. Just check trial balance kidogo. Go through your trial balance. So I think examiner will say bulls in farming, bulls are treated as non-current assets. We don't treat them as stock. That's why even in the opening, they were not there. They are down there with the land, building, tractors, and the rest. So bulls, we treat them as non-current asset, not as inventory. So I'll not bring bulls as part of this ones here. Bulls are supposed to be treated as non-current assets. Then they are subjected to depreciation. We depreciate bulls as time goes by. So ignore that. Dairy cattle feed, 1620. Bulls, your standard ukisoma, bulls are supposed to be treated as non-current asset, no stock. Fertilizers, no. So those two, only the two. Bulls are to be recognized as long-term assets, not stock. So 54 plus 1620, you get 55, 620. 55, 620. You subtract. So tell me the total. That plus that minus that. It's really, I don't know how to level. We add this plus this, we subtract, then we get the total. So total of this is what we subtract to the far end.
Yes, I'm okay now.
Very good. So your total will be how much? 22,360. 22,360. So your gross revenue will be the sales minus the 22,360. $16,100. $16,100. Add other revenue. Add other revenue. So other revenue, family consumption, milk, there was milk. So family consumption, the one which they took to the relatives, note number 2. They took to relatives 4320. Then there was transfers 2. So transfers 2, crops. There are some manure which they sold in quotes to crops. Note number 3, 600. So total revenue, can you add the 3? Can you add the 3? People are getting how much? The sum for the 3? $21,020. Then less expenses. So expenses, the ones which relates to livestock. 1, transfers from crops. There were some so transfer from crops, 1,500. Check additional information number 4. The plants which were used to feed the livestock. So that is 1,500. Then if you check the last item in your trial balance. The last item in your trial balance. The last item in your trial balance, there is dairy cattle expenses. So medicine, there is medicine of 1080. There is labor. So this is dairy cattle labor. So dairy cattle labor. Dairy cattle labor was 9480. Then there is other expenses. Other expenses, 1440. Then there was napier grass labor. Check it somewhere there. Kabukwata balance. Don't try it if you can't see it. There was napier grass. Napier grass labor. Napier grass labor goes to livestock. So that is 1,000. Only. Those are the only expenses which relates to livestock. If there is one you are suspecting, bring it to our attention. If none, then give me the total. Add 14,500 ambayo ilikuwa ya kitambo. Olivia sit already 14,500. So 14,500. You subtract. So 21 minus the 14,500, just a minute. Hello, bro. Sorry for that. So you got 6520. Thank you. So 6520, you write there net revenue to profit and loss accounts. That is what we'll take there. So we have successfully answered Roman 1. We have successfully answered Roman 1 of the questions. Unless you have a concern, I want us to go to Roman 2. Roman 2 is income statement, which is P&L. Income statement, which is P&L. So I'm turning my camera. There. So right there, David Wekesa. we delete everything. I hope kila mtu amaliza. Is there anyone here who has not seen the handout I shared with you yesterday? Anyone who has not seen? So that handout which I shared with you, please soma hiyo kitu properly. In exam, kuna na theory questions, not less than 20 marks. All of them come from that handout. So read that handout like 3 times. 1, 2, 3. So we kick off. So P&L brings now all of them. So all of them doesn't mean the income and expenses which we have recognized from those other departments. Again, we repeat, no. So you come here and say revenue from crops and livestock. Revenue from crops and livestock. I remember crop was 37,080. 37,080. This one we have just gotten here 65,20. This one we have gotten 65,20. So add the two. Add the two. What will you get? 43,600, Brian. 43,600. Then you less expenses. You less expenses. So the expenses we are going to subtract are the general expenses, the one which were not relating to livestock or crops in specific. So you subtract the general. So there is general expenses. General expenses, 10,800. Then trade, capital, cash, daily, no. Which other expense can we see? Let's go to the notes. Note 1, no? Note 1, there is something. Note 1, what are your bulls? Bulls at the end of the year 2019, in note 1, when you waliweka kwa stock, which I said was not the correct thing to do. Bulls, they value the bulls at the end of the year at 5,400. Check trial balance where we have other cattle, bulls. The value of the bulls, how much are you seeing? Let me see whether you can see the bulls in the trial balance. How much was the value of bulls in the trial balance?
6,000.
6,000. That is correct. That is correct. So bulls in the trial balance, trial balance is at the beginning. So at the beginning, bulls were 6,000. At the end of the year, they are valuing bulls at 5,400. And this standard normally says that we need to depreciate bulls. So it means the bulls have lost value. So loss in value, bulls will be 6,000 minus 54. That one, someone can fail to see. So this is 600. That is 600. Then we proceed. Note 2, there is nothing. Note 3, nothing. Note 4, nothing. 5, nothing. 6, depreciation. So there is depreciation. So depreciation, what do they want us to depreciate? Tractors and carts. So tractors and carts. So reducing it on the book value for 25%. This other one, they want us to provide at 12%. So take 25% times the value of tractors. Tractors, when you check the book value, tractors go karibu na land 32,400. The other one, carts at book value is 3,000. So can you give me the two answers? You say this and this. Give me those two answers. Tuharakishe kidogo, lazima tumalize balance sheet. I can't leave it hanging. Na naona time imeanza ku trickle down. So tuharakishe kidogo. Kidogo, mbio tumalize. I cannot leave that balance sheet. Itanisumbua to connect in the next class. So give me the two answers, 25% of 32,400 and 12% of 3,000. 12% of 3,000 is 360. This is Marian, 8,100 and 360. 8,100 and 360. Actually, those are the only expenses we have. So can you add all the expenses? The four of them. Can you add those four expenses? Can you add the four expenses? How much do you get? 19,860. 19,860. And because I saw tax somewhere, what you get will be called profit. Profit before tax. So you take 43 minus 19,860. What do you get? What do you get? 23,740. Correct? Less tax. Tax we were given in note number 7. The last additional information, it was 3,600. So profit for the year after tax, it ends there. PAT will be how much? PAT will be how much? 20,140. Thank you. 20,140. So we are done with the profit account. Let's go to the statement of financial position. So right there, David Wekesa. Statement of financial position as at 31st October 2019. So have that arrangement very fast. So we are ready to start the balance sheet. So non-current assets. Non-current assets, we first of all start with the biological. So start with the biological assets. You start with the biological assets. So check note 1. Check additional information number 1. There was dairy cattle. So dairy cattle, bring it here, 54. Therefore, wamesema ni stock, but the standard requires biological assets to be treated as long term. So dairy cattle, 54. Maize growing. Maize growing is 2,700. Other cattle, bulls. So bulls, 5,400. Dairy cattle feed. Feed is not biological. Biological, those which are breathing. Fertilizer, no. So can we add and get one value for biological assets? Can you add the 3? $62,100. Other non-current assets. Other non-current assets. There was land and buildings. Land and buildings was 90. Land and buildings is 90. Tractors were 32,400 minus depreciation. You people have depreciated 8,100, so minus 81. So what is 32,400 minus 81? $81 is the depreciation. I'm trying to adjust it, Joshua. I've noted the board. That's what I'm trying to. Let me even reduce the lights. It can somehow be better. So 32,400 minus 81 for depreciation. What do you get? Olivia, 24,300. Then cats. There were cats. Cats were 3,000. We depreciated 360. So 3,000 minus 327, 2640. Yes, even I've been given 2640. So can you add these other non-current assets, these 3? You get a total figure there. So 90 plus that, what will you get? Maria, 116,940. 116,940. So total non-current assets will be how much? 62,100 plus 116,940. What will you get? $179,040. Thank you. 179,040. 179,040. And we go to current assets. So current assets start with inventory. Inventory. So inventory, zile zilibaki hapo not 1. Dairy cattle feed, and fertilizers. So that is 1620 plus 1080. In note 1, those top, you should combine them as one. $1620 plus $1080, what do you get? You are getting 2700 as column. I saw cash somewhere. There was cash. Cash at bank. Check. Hapo kwa trial balance towards the end. So cash at bank. Cash at bank was 15,300. This is 18,000 when you add. So what I want from you is total assets. Total assets. So give me the total assets. Total assets. 197,040. 197,040. I finished that. Then we are on the last phase now, capital and liabilities. Francisca, are you driving? I can see motions. Wait. I hope you people are done because I'm going with your pace. I move after you've given me the answers, so I hope we are together. So let's come up with capital and liabilities. So capital and liabilities. Capital and liabilities. Bring capital itself. I saw capital somewhere. Near cash, there was capital. Please check. There was capital somewhere there. Capital 163,080. Then you add net profit. How much was our net profit from P&L after tax? The profit after tax, it was how much? I've forgotten about that. Our profit after tax was how much? How much was our 20,140? So add 20,140 there. Then you reduce capital with the drawings. Reduce capital with drawings. So less drawings. Drawings can be in form of cash or goods. I never saw cash draw. If cash drawing is there, you add it together with the goods. So in note 2, there were those maize which they were consuming, they were taking to family members. When you give relatives, ni capital yako unapunguza. So in note number 2, check note 2, that is 5,400. And because I know this drawing, you can look for it when you are revising. Wake up. This is note 2. I know you will look for it. So we got it from note 2. The milk they were consuming, giving relatives, like that. So what is our net capital? This plus this minus the drawings. How much is the net capital? We are almost there actually. $177,820. Later, go up. 177,820. So venye siku sijakuona from the start. 177, 820. Then current liabilities. Current liabilities. There is payables mahali. Huko juu, there is trade payables. Trade payables. Trade payables are the creditors. Trade payables are the creditors. So that is 15,620. Then the last additional information. The last additional information. Now, Maria, Papa kweli. There are some people now. The last additional information, they said income tax is estimated. When you estimate, you have not paid. So current tax 36. So total is 19 to 20. Can you add whether it is balancing with our total assets? So total capital and liabilities. Confirm whether it is agreed with our total assets. Yes, so this is 197, 0, so we are correct and accurate. So apparently, hamuna swali lingine kwa hiyo past paper ya agriculture. You don't have. So I'm going to design 2 questions and I'm going to share with you. You start with the first one, which I will put there and tutafanya in our next class to wind up that topic. So I'll give you 2 questions. The first one we'll do in class. The second one will be for your own practice. So tutamaliza on God willing. We shall finish on when? Our next class is on inakuanga siku gani? Thursday or Your class again is on Friday. On Friday, yes. So tutamaliza your Friday, God willing. Then Saturday, we are starting group accounts. Group accounts is compulsory in exam, 20 marks. Is a must. Easy tunajaribu tu kama itakuja, but group is a must. So we shall start on Saturday. Otherwise, thank you. Have a nice day. We are finished on time. Asanteni sana. You can log out so that I compress the video. Muwe na siku njema. Thank Olivia.
Thank you, Mwalimu.
Yes, Maria ama nani?
Yeah, if it is Maria.
Yes, Maria.
Thank you, Mwalimu.
Aya, sawa. Na muwe na siku njema na msome. Go and print that handout. Ile nilituma jana. Print and read properly. Aya.